Okay. Good morning, everybody. This is Dennis Wilson with the Active Trend Traders. We have Harlan and David joining us from All About Trends. How are you gentlemen today?
No complaints. I'm dry. You're wet.
Yeah, David and I escaped without any power outages. I hope anybody who's listening from Northern California enjoyed the pleasant rain. I was sharing with the guys before we went live the rain in Northern California, or at least I grew up in this area, for as long as I can remember, it's always been kind of, it's a gentle kind of rain, not a hard rain like you get in the tropics, or if you're down in the southern states where when it rains you get whiteouts and all that kind of stuff. But it just shocked the heck out of me this week that, and it's the first time my wife and I can remember, they actually shut down the schools before the storm got here. And I'm just scratching my head going, anyway, I won't go there. Let's get in and talk about some stocks. Remember that all the materials we present here are for training purposes only, and traders should always paper trade any new method prior to the risk of their own personal capital. Reminder that David and I will be at the World Money Show in Orlando, Florida. Dave, I read the what you wrote up for what we're going to be presenting. We're going to be presenting on the topic of the art of trend trading, correct?
That's correct. It's going to be fun.
And I've gotten a couple of emails from folks who are down in that area who are going to be dropping by and just checking, seeing us and all that kind of stuff. So I'm excited about that. And so we'll press and go forward. But we're actually presenting on which day, David?
We're presenting on Saturday morning at I think it's 9:30 their time.
Okay, so Saturday morning, the 6th of February, correct?
Correct.
Okay, excellent. And so
the 7th of February, actually.
The 7th, which is Sunday.
Saturday.
And are we sure? Okay, it's on the 7th. It's the final day, and we'll be there 9:30 in the morning. But we will be enjoying the whole thing while we are there. So, just want to remind everybody that David and I both would love to share with your group. So we have a couple of really great presentations. One is the art of trend trading, or how to benefit from alternative entries. Is a secondary presentation we can give. And if you would like us to present to your group, no matter where you are, we can do it by webinar. Or if you're in a group in the Bay Area, we can do it in person. Just let us know when, where, and it'd be a great way to start off the new year by making doing some presentations. And David is really a good speaker. And I just bring charm and wit, right, Dave?
No. You're much better than I am.
So, okay, so what's the markets doing this week? I kind of categorize this week in the market as the weight of the world. Has the weight of all the economic weakness in the world come and settled finally on our own indexes? Or is just going to be a really nice setup for a potential Santa Claus rally? Historically, what's interesting, at some point mid-December-ish, to even going into sometimes the last week and a half of December, there's typically a little bit of a boost, somewhere between 3 to 5%, where the market runs up. This has been kind of an interesting year, in that typically the first and second year in the presidential cycle, the first and second year of an incumbent's term, are usually faced with kind of poor market conditions. But the S&P, the NASDAQ, has had some great runs this year, and last year in particular up big time. And so I keep scratching my head going, could we be looking at something, are we sowing the seeds right now for a potential more significant correction in 2015? I mean, time will tell. But clearly with all the government interventions in the marketplace with the interest rates and all that type of stuff, it would seem that they do not want the market to fail. However, all the shoring up, if that shoring starts to slip, it could be very interesting and in the future. But S&P this week, seeds of a correction in 2015. We did have a bearish cross, so the 8-day moving below the 20-day, which provides kind of a posture of a little bit of short-term bearishness, but the market still has been holding up fairly well. Then the NASDAQ 100 at support as of when we wrote this earlier today. It too has had a 820 cross to the downside, and the Russell still the weakest link, but finding support. The outside influence again this week, I'll just hone in on: are we going to be impacted by the world economic weakness? What we saw over the past couple of months is where the weaknesses in, globally that were coming to bear in their markets was actually resulting in a boost in our market because investors from overseas were pouring money into the U.S. market. Is it time for that to stop? We shall see. And here's where we were last week. And we've gotten a little bit of a correction this week. The S&P was down a little bit, and we'll look at that in the charts right now. Oh, don't let me forget. Percentage stocks above the 20-day moving average on the NYC. It is moving down towards the lower reversal zone. This does not mean we will get an immediate rebound. However, this is one of the indicators we utilize with our early warning alerts for trading index ETFs, one of them, but then there's other proprietary stuff that we add to this to know get a better timing on when to get back into index ETFs. But as you can see, we are slowly marching downward. What was very interesting in this particular time, we surged down, got a bounce, drop, bounce, drop. We haven't dropped down below the 30 yet, but this may be an indication that we are getting closer to a potential rebound, or as we saw back in October, what happened is once it got below the 30, that's when the acceleration to the downside actually started, and then it took about a 2.5 to 3 week period for us to finally move back up off the other side. But then once it moved, it went dramatically higher. Let's go to the charts. Okay, the S&P. What are we doing on the S&P? As we can see, we started selling off earlier in the week. We had a couple of real, a big day down, big day up after a major sell-off on Tuesday. Then Wednesday, another down day. Then Thursday, a up day. But where did we stop? We stopped right at the 20 and 8-day moving average. And then today we gapped down right to a support level at about the 2020 area on the S&P. And right now that's holding. Positives for the chart, we're still above the 50, and they're sloping up, and we're still about the 100 and still above the 200. However, here is the bearish, short-term bearish 820 cross, and if we close above the 2020 level, I would look at that as being, being a positive. I'm not going to say that the market's going to, that's going to, that we won't just bounce back up, because what I'm looking to trade right now is a bounce back up into the moving averages and then a fall back down. This is the magic fib box, the 38 to 62% potential retracement area, and that's based from this low to the previous high. What are we looking at on the weekly charts? We're getting some divergence in the TSI, and a little bit of equality to divergence in the stochastics, but we're getting the turnover. And the last time that these have turnover, you got a little bit of a sell-off, at least back down. In this case, this is the 20-period moving average, which equates to approximately the 100-day moving average. So that would be an interesting place for a bounce. One of the things that does get my attention is that this correction here was different, significantly different from all of the correction we'd had over the last, oh gosh, almost 3 years. Let's take a look at the NASDAQ. And Harlan and David, if you're wondering, I muted you because there was some background noise that was coming through. I'll get you guys off mute momentarily. So these are live charts, and what are we doing? We basically, on the NASDAQ, we dropped this morning right to the 4,200 level, which is strong level of support. This is where we found the support here and went higher. The momentum has dropped off and now fallen below. The TS, the True Strength Index has dropped below. Typically, once it drops below this zero line, that is indicative of a stronger potential of going into a deeper correction. We have similar indicators here on the weekly chart, where it's looking like, that if this, 4,200 level does not hold, that further downside, further correction would be expected. Right now, I'll just do a real quick check to give you an idea of how far we have. So as of right now, we're about 2.7% below the high that it made back here in the last part of November. The Russell. The Russell, as with the other indicators, or the other indices, excuse me, look where it bounced to. Okay, and we've been talking about this in the market updates on a daily basis almost, that we have got a very significant level of resistance up here at about 1191 and a level of support down here at about 1153. After yesterday's inside day, we had 2 inside days this week on the Russell. However, there was really no trend to actually break away from. And so with that, they since there was no trend to really break away from, it took away a little bit of the importance of inside days, because typically an inside day at the bottom of a downtrend can give an indication that upside is in the offing, and at the end of an uptrend, an inside day can give an indication that downside is in the offing. But pretty amazing, guys. The Russell is still playing within the boundaries, and it's not coloring outside the line yet. So basically, until we get David, I'm trying to take you off mute, buddy. Maybe you've muted yourself.
He's trying to take himself off of mute.
Okay, there we go. Until this level at 11.
Come on now.
Okay, until this at 1153 is busted, then it's going to basically continue to run in this area. If it is broken and violated to the downside, you've got support at this is the 200, this is the 100, this is the 50. The 50 has, in fact, started to slope back up. However, if you look over here, for almost the whole year, the Russell has been trendless, although it has provided us some really wonderful trading opportunities as it has zigzagged its way along to basically a zero return for the year. So that's what I'm seeing from on the index charts, guys. You ready to shoot yours out there?
I am.
Okay, David, I'm switching over to you. And both of you guys are off mute now.
Okay,
And
thanks a lot, Dennis. Yeah, I agree. It's really all about the Russell. I mean, that box, that sideways box that that you just showed that's where it's been, and that's why we haven't seen a lot of progress in stocks, because the Russell, which is the index for the small caps and the index for most of the leading stocks that we like to follow, is just trading sideways in this range. So we'll see if the support that we're at right now holds, and if so, then we'll look for better performance from leading stocks. So in the meantime, we're seeing the indexes pull back here, which is what we like. This is when we'd like to buy. We like to buy not when the indexes are overbought and are stretched and are making new highs every day. We want to buy them as they've pulled back to areas of support. Same thing with stocks, and we have a lot of stocks that are doing that, because that's what we do. We buy support and we sell resistance. So if you look at the index charts here just quickly, you see the Nasdaq's got multiple levels of support that are nearby here. So definitely very short-term oversold as well with the stochastics. So we're in what we call the zone, and 90% of what we do is sweating it out while we're in the zone. So and that's where we're at. So it's just a matter of when and where we're going to get a bounce. The same thing goes for the S&P. It's breaking a little bit of support today, but there's another level of support here at the 50-day. Again, well oversold, even more than the Nasdaq. So for us, it's all about three things in the market: uptrends and how to trade them, downtrends and how to trade them, and change in trend patterns. And given that the markets have pulled back and are near support levels, it's really all about the uptrends right now. I showed this last week, Exact Sciences. This is a great textbook example of what we do. We have a stock that's in a long uptrend here that's pulled back to support, and then voila, it breaks above the pink line. That's where we take our trade, and we locked in a nice 13% gain in just about a week and a half on this one. So that's exactly what we do. And here's Under Armour, which is triggering today. We have a stock that's been in an uptrend, traded sideways for a while, tried to break out here, and then pulled back to support at the 50-day moving average, lateral support as well, and it's triggering a trade today by breaking above the pink line. Notice how the stochastics are also well short-term oversold. So this is exactly what we look for, and from here on out, it's all about follow through and seeing UA break through this resistance level 2 and breaking the new highs, where we will likely probably lock down our gains at that point, because we'll already have some pretty nice gains, and that's just how we do it. So it's really that simple. So right now, it's just all about managing the overall trend of the indexes. Sure, they're pulling back, and today's another day where we're bouncing around, but the overall trend is still up, and this is the pullback that we look for. This is the opportunity we look for. We talk about, we use a bowling analogy a lot, where we need the market to reset the pins. Well, the market's reset the pins, and now it's just a matter of bowling for strikes. Once we get a bounce here from some of these support levels that I just went through. So we've got some current positions, and we're just waiting for them to move, as the market finds support here, and we'll be locking in gains from those, and hopefully have a lot of those to show you next week or soon after. In the meantime, we just manage what we have, manage the overall trend, and that's pretty much it. So if you want to, this is a great time for you to come on board and see what we're doing. We have a 15-day free trial. So all you need to do is go to our website, sign up for that trial. Just tell us what email you want it sent to. You'll get everything our paying subscribers are getting completely for free for 15 days. There's no credit card needed or anything. We have some cool videos that we're doing as well that really help our charts come alive a little bit, and explain it further like I've been doing here in this webinar. But this is a great time because we've got a lot of good positions, and we also have a lot of other good quality setups on our watch list. So if you miss the trades we're in now, there's plenty of others that are on our watch list that you can take advantage of. And it's just I can't think of a better time to come on and take advantage of what we're doing here, because there's so much action right now. There's so many setups, and it's kind of a fun market right now. So that's about it, Dennis.
David, thank you very much. Harlan, you got anything to add to that real quick, and then we'll get into wrapping up and then looking at charts, man.
No, it's pretty cut and dry. You know, this is what we live for. You know, we're when most people are extremely bullish, you know, we tend to pull in our horns, and you know, the flip side is it's always darkest just before the dawn, and that's when people are the most fearful. So we're not. So it's kind of a world of opposites.
Yeah, you know,
psychological standpoint, but we use support to guide us.
Yeah, support, and you know, and you know, I do much the same type of thing. I know we use different type of triggers to get us in and out and all that kind of stuff, but there's some similarities in what we do, and so that's what I enjoy working with you guys so much. You know, and so I am. Let's see. Let me get back to show my screen, and this. Yeah, Harlan, I got to say, you guys. I think you guys shorted this up here about 226, and that was
45.
Okay, 245. So up here, and we continue to fall. But yeah, that was a really good short. I really appreciated and enjoyed that trade you guys did on Tesla, and she continued to fall. But will she continue to fall? Let's take a real quick look at, here is, you know, how do the active turn trading picks do this week? What we do in our weekly newsletter for our premium and basic and also early warning subscribers is basically we put out a trading report that basically lists upside potential trades, down toss-up trades, which are basically they could go either one of two ways. And what we try to do is highlight a significant number of stocks that are looking good for potential moves down. Now, some of them may need a little bit more of a setup, but that's what we're looking at. So clearly this week was a favoring of the downside. And some of our downside trades earlier, the setups, Tesla, basically we called that over the weekend to say, hey, it's a 223, but look for some downside setups. Kihu, YY, Green Mountain is in the process of getting ready for a downside break, doing a real nice setup right now. Our toss-up trades, AMBA, really nice downside. It was questionable, but now it's made its decision. Facebook's still posturing. The bullish trades didn't fare too well this week, and but they could still be setting up and searching for that support and that bounce, like many of the other trades we're looking at. So far this year, here's what we've done. December is turning out to be a much better month than November. And here's our margin count, how it's done. The gross is here. IRA, 55, 56 for the gross. And then, you know, active trend trader, our motto is, one, we want to clarify, simplify, and multiply. Over the last 3 weeks, I'm kind of glad the market has been kind of flat to sideways a little bit. Because we've done some renovations on the site and basically launched a couple of new things. One is I went through some training, and we're in the process of working up, you know, a much stronger watch list with better indication of this internal strength of IBD quality growth stocks. And what this should lead to is it should lead to fewer fake out breakouts. Introduction of the early warning alerts for index ETFs. We've launched that. And also now we have free text alerts that is just getting in place for our premium and early warning alert members. And then we'll be offering some affiliate opportunities coming up here shortly. Right now through January 1st, so for the next 2.5 weeks, we are offering the premium monthly for the active trend trading for $29.99, 40% savings. And also we just launched our early warning alerts, and we may be getting set up for our first alert if things continue to go the way they are in the market. And we're really excited about this. This is a system. We have two basic services, one for the more active traders. This is one for somebody who doesn't really have the time to be an active trader. The average trades on this particular service is 3 to 6 trades per year. And but as you can see, the non-leveraged return on IWM this year to date is about 29%. That's a cumulative return. If you want to know where to find those, all you got to do is go to the YouTube channel, and you can find the December membership specials there, or you can run over to Active Trend Trading, and the specials are highlighted under membership subscriptions. So that is, so you guys about ready to look at some charts and stocks?
Sure.
Okay.
That's good.
So guys, have a great weekend, and we're going to keep the recording going because I'm getting really good feedback that members and folks are enjoying getting to see the actual stock analysis in the recording. So I'm keeping that live, and we'll keep the recording go through to the end. So I have a list of stocks to review, but I'll sign off saying, David, Harlan, thank you so much. You guys have a great weekend. David, try to stay dry. It's supposed to be a nice day tomorrow.
Yeah, so far so good. I love it because it sets up for a great skiing. So I'm happy about it.
So, folks, keep growing the egg, and remember, trade wisely, trade profitably. And, of course, Harlan, you're up in Wisconsin, right?
We are.
And I know it's snowing and cold, and it's snowmobile time for you. And
Well, yeah, let me put it to you this way. Last night, my son was the only person in the lower half of the state of Wisconsin that was able to get on a snowmobile and rip around, because there's no snow here. We make our own snow.
Well, wait a second. I thought it gets cold and snows up there a lot.
It does, but for some reason it's all way up north, and I'm by the Illinois-Wisconsin border, so we have no snow yet. We just have the cold, so we have to make our own snow at this time of the year.
That's amazing. So, okay, David, here's some of the stocks we got to. I'll do G Pro. There's ILMN. You guys have that?
Okay. I think so.
Okay, AKRX.
I don't know if I have that, but I can draw it up.
How about LinkedIn?
I got LinkedIn.
Okay.
Yep. David, I'll tell you what. I will add these into the core with an exclamation point, the ones that we don't have, so then as you scroll down, they'll show up.
All right, I'll do LinkedIn first.
Okay. And then I'll come back to GoPro. Now, I know you guys, we have a question from somebody regarding the sector ETFs. Now, I don't pay that much attention to the sector ETFs or how the sectors are doing because for the main reason is because there is so many targets of opportunity out there. I find that focusing just on index ETFs and all that kind of stuff and individual stocks is enough. But do you guys do any research on like the energy sector right now? Are you guys taking a look at that for potential shorting or anything like that?
Not too much, and
okay.
Let's say this right here. When you talk about energy ETFs and things like that, first off, understand that if you are shorting energy right here, you are extremely late to the party.
Right on.
This is the point in time where you can literally, when a short cover rally shows up, it will rip your face off if you are short. So be extremely careful about that. Just like we see markets that go vertical, look what we're seeing now. 2 weeks ago, everybody was bullish beyond compare and the sky's the limit after we've already ran for 3-4 months. So here too, you were up in a high risk zone, late to the party, and look what's happened.
Yeah, right
so,
on.
Stay away from that trade. for right here, because right now there's no bottom. You're trying to catch a falling knife. There's a lot of money leaning one way, and usually when everybody's leaning one way, that's about the time that the market turns to the opposite direction. So
That's
I
right.
would just try to stay away from the energies if you're looking to short them.
Yep. Yeah. It looks like I just popped up a chart of the XLE, and yeah, the optimum opportunity to short that was on.
About a month or two ago, huh?
Actually, it did a real nice setup for a short trade on the 11:25. So right before Thanksgiving.
What's the symbol?
XLE.
Yeah.
Yeah. Okay. Go ahead, David.
Well, look at it's an extremely good example, because if you look at it in August.
Okay, but nobody else can see my chart because David's
Okay.
chart's up. Sorry.
All right.
We'll bring it up before moving to the next one though. Go, Dave.
Okay, yeah, LinkedIn is a really nice setup. It's on our watch list right now. You can see it gapped up here, but it went nowhere because it went from 195 to 240 in a couple of days. So it's been doing a nice pullback. It had a little bit of a dip here on Tuesday when everything else did, but closed the day at above the 50-day and has yet to close below the 50-day for quite a while now, and it's showing some pretty good relative strength the last couple of days as the market's been down. So this looks like a great setup, a nice pullback here. We got multiple levels of support, and it's just about breaking above that pink line.
Okay. And let's see. Did you guys also have ILMN?
Yep, just added it.
Okay.
Okay. Pull that up here. I got to get the webinar stuff out of the way. It's not letting me move it. There it goes. Okay. ILMN. Where are you? There you are. Okay. So again, just trading. It kind of looks like the Russell, just trading sideways here. Clearly defined resistance up here, clearly defined support down here. It's pulling back the last few days, very short-term oversold. So everything I was talking about in the webinar, we see here. I'd like to see it continue to pull back a little bit more and retest this blue line here again before it moves higher. And what was the other one?
Okay.
AKRX.
AKRX, and I will get on G Pro and
I'll take AKRX. Okay. David, you can pull it up and I'll talk it.
It's up.
It is. Okay. All right. Interesting thing about this issue. As you can see, it broke out of a base right around October. Vertical run right up, sat up here, put a double top in at that 44-ish zone. What's interesting is, and I had a really good conversation with one of our subscribers about this, you see these breakouts, they happen, and one of the rules, when you come to buying breakouts is, you buy the breakout, and then you start to take some profits at around 20%. And what typically is happening is, sure, a lot of these names, they will break out, they'll run up, they'll get close to the 20% mark, or, in this case, this one and Baba actually get up to the 20% mark. Everybody takes their gains and it falls right apart. So if you're an investor, the next thing you know, if you hold on long enough, you got nothing to show for it. So, but this issue, you can see, it was extended going into earnings. It was chopping around between 42 and 44. Earnings came out, the stock was extended to begin with, and it killed it. So now it's just kind of channeling its way up off of the November lows. What do I need to see to take a trade? I need to see from here a pullback off highs pattern to form, and for it to stay above the 50-day. And right now I'm just 2-3 days isn't really enough yet. Bigger is better.
Yeah.
The exact opposite's happening here. Instead of it being short-term oversold, it's short-term overbought, as it's made a nice run from 34 to 42. So we need to see, the definition of a stock being an uptrend is higher highs and higher lows. So let's see it pull back here, make a higher low, and then we can take a look at it.
Can I comment on that chart?
Yeah.
Because that chart does not show a pattern, I would go to a longer term to take a look at it on a daily basis. It does not appear that it has a personality or a character of putting in good patterns. In other words, nice controlled either flags or small body candles and that kind of stuff to be able to make decisions to trade it off of. And so because it does not show that characteristic, I would probably move, and I'd have to look at the I would look for a stock that basically showed better patterns. I would of course look at the volume profile, and I'd want to know what the stock checkup on that was also. And I know it's one of the has been one of the IBD 50 leading stocks, but that pattern, I mean, for me it's a gagger. I'm sorry.
No. You got to speak your piece, and Dennis, we say it a little bit different way. A pattern should jump out at you. If you have to squint to see a pattern, guess what? It's not there, and it's on to the next stock.
Right.
You want the strongest, only the best, and forget the rest, as we always say. And this just doesn't show it. I mean, if you own it and you've got nice gains in it, hey, more power to you. Yeah. Just maybe use the 50-day as a trailing stop.
Yeah, right on. So, anyway, yeah, I mean, that's such a much better way to say than gag on it. But anyway, right? Hey, it's Friday, man. Huh?
Whatever works.
I go, oh. Anyway, so let's see. Let's take a look at some. We got a couple others here. Okay. You should be able to see. I did bring up the ETF for the energy sector, and here's what we were talking about a little bit earlier. It's kind of interesting that here's where this was back on mid-June. Okay, so summertime. The energy, man, it ran on a really nice run most of the year, and then started rolling over. And then this is on a weekly chart. Let me get back my. And here's what we were talking about, Harlan. There was the most recent time was this retest back up at the 50. But look at this here. We get the topping process going up here, and then right here we can run right back up to the 50. And that was in the first 9/2, so that'd be first part of September, last part of August. Runs right back up, rolls over, and has been basically just dropping as we're seeing now. I mean, the futures are the crude futures was down to like $56 today, and I'm going, whoa, that's interesting. And you brought
Putin is being punished.
how, and so we could talk about that.
Well, this is a good chart. Can you keep this up for a second?
I can.
Because this is going to come into play when our markets truly go into a big correction. That stuff that you're talking about from August through September, off of that peak, off of the peaks, it fell apart. Came down to the blue dotted line that Dennis is showing. That is what we call a first thrust down change in trend pattern.
Yep.
And here's our mantra. First thrust down, snapback rally, which is what we saw, and then it's bombs away on the break to the downside.
Yeah.
This pattern, mark my words, is going to show up next year all over the place. In a lot of the names that are the big screamers, because all stocks ultimately do go through corrections.
That's right.
That's the what to watch for if you want to use it as an opportunity to make money on the short side. If you're long on a lot of names and they start showing that pattern, that's your what to watch out for. So these are the things that we constantly point out to all of our subscribers. Now, you also had that really big one that Dennis just laid out. That was a hard trade because you had to short that huge gap.
Yes. Yeah. That was a tough one. So anyway, so that's about all we have on the energy. But I mean, the charts are the charts, and that's what's really interesting is the charts are the charts, and these patterns repeat. One of the things, and for me, it's a kind of early alert, is I'm looking for that first, second, and I count them basically. How many times do I get a bearish cross of the 8 and the 20? And as long as I have a bearish cross of the 8 and 20, I have to be very careful when I take any bullish trades, because at least in the short term, if the price action is below those levels and you've had that cross, short term, the expected move is bearish until it proves that it wants to become and bounce and become bullish. Here is GoPro. We highlighted this on Wednesday night. Somebody asked on our training sessions the midweek market sanity check, and this was there. I think the 10th was Wednesday, which is right there, and it had just broken the support level of 64.71-ish. And sure, clear enough, it continued to, it came up and tested that breakout, and then reversed off of that Thursday, and today we're getting kind of a little bit of a gap up, but it may have come in and found at least some temporary support here. But since this was almost straight up off the bottom move, there is a little bit of support that is. And since this is a newer issue, it's hard to say you have strong support because there's only one candle that got there. But what the heck? You guys see this support just off of this little high right here? Just a little bit. And so since this is a newer issue, because it held, it come up and hit that level of resistance, then it became a level of support. So it is finding support there again. And if it proves itself, that might be interesting for GoPro. Or if GoPro makes a little bit of a, there it is, a little bit of a bounce back up into the moving averages, because now we've got multiple bearish crosses, the 8 below the 20, below the 50, and you've got these moving averages starting to roll over, which that's one of the important things in determining trends, is basically what is the slope and what is the stack of your moving averages. Is it a bearish stack or is it a bullish stack, which means it's a bearish stack if the smaller moving averages are below the bigger moving averages. So what do we have here? We have 8, 20, 50. Still above the 100 though, but it is looking like if we break below, if we come back up here and break below this 57.15, then we are very easily looking back for 50 or even lower, because that's looking kind of interesting, guys. Huh.
That it is, and one of the reasons for this weakness amongst technicals is also the lockup is expiring.
Yeah.
But let me, I don't know how to explain this, but I'll just shoot with this. They did a secondary offering. I wouldn't be so worried about the lockup because the insiders are already gone. When they did that secondary offering, I think it was like 10 million shares or something. Guess how much of that actually went to the company for expansion purposes? 1 million shares. Guess how much went from selling insiders? 9 million shares. That is classic. Out of the smart money hands into the retail money hands.
Yeah.
So when you start to see, for future reference, when you start to see a company announce a secondary, always look at what is, how much is going to the actual company for expansion or betterment of the company, whatever you want to call it, and then how much is selling shareholders. So in that case, you saw a huge, 90% of that secondary offering was selling shareholders getting out. that's a pretty scary thing, actually. So
Yeah.
it's what we call, you got to sell your peanuts while the circus is in town. Well, that's how insiders did it.
And kind of what's interesting is we, we kind of have this little downward sloping triangle here, and if that's the high and that's the bottom of the triangle, and if that breaks, you take this line here that I just drew in here and project it down. And this is a log chart and exponential chart. If you just drop that straight down as you saw me do, look where that takes the target price of this if we do get a failure. We're talking about $16.50. Interesting stuff. Anyway.
Wow.
Yeah. Now, I'm not saying that that's going there tomorrow or anything like that, but that is the technical measure because it still has some nice support down here at the 37 level, and it may not get that, but just taking a look at that, and I'm going, I doubt that that's going to get there, but we'll check it next year.
Well, I would think the 37 is going to get defended initially at least.
Yeah, I mean,
before it gets there, it's got to get defended at 50.
Yeah, I mean, you've got this thing going on in here. You've got this nice support zone between, like I said, somewhere between 50 and 37. And so there's a whole lot of things that can happen here. But even a break below the 57, if you trade it down to 50, that's still a nice little move. So anybody have any other stocks? Okay. Let's see. It appears like we do not have any addition. Oh, some just popped in. Green Mountain Coffee. Green Mountain Coffee is looking kind of interesting, guys, from my perspective. We've basically, it has dropped out of the sky here with, and it is basically doing a bounce back up towards the 50. Will it make it to the 50? I don't know. I mean, I would like it if it made it up here in the 140, 140, 141 range again. Today with the market, what's going on with the market, it is kind of just holding its own. And so we do have some positive on the momentum moving up over this period here, but right now it looks just like, I'd have to throw the volume on, but it looks like just a wedge up for a potential reversal to go deeper. What are you guys seeing?
Pretty much exactly the same thing. One thing I will add to that, though, is you might want to look into the fundamentals because I think Coca-Cola owns a huge piece of this company.
Yeah, I was just going to say that. I think I spoke about this last week. I think the story behind Green Mountain is over. I mean, most of their management has left, been paid off basically by Coke, and what's left is, I think it's going to be one of these stocks that's going to be in a prolonged downturn for a while. It's going to go the way of Coors and QIHU and Priceline, those stocks that have topped out and are in downtrends now, and
right.
I think it's just a little bit, it's got a little bit more work to do, but I think it's going to end up being a pretty nice short sell at some point.
Yeah.
Yes. However, there's one caveat, and that is if Coca-Cola decides to say, thanks, we're just going to take you out, you're going to get a huge overnight gap in the stock because, it's a buyout, it's a buyout. Where and when and at what level does it start? Who knows? But we think, the growth story is just like David and Dennis pretty well said, pretty well done. It's pretty much a household name these days. And, but when you do have a company like Coca-Cola sitting there in the wings owning a big piece of this, it could create at some point them announcing a buyout of the issue. But again, at what level and when does it start, if it starts at all? So it's just kind of one of those funky trades that's kind of hard to want to take on either side.
Yeah, I mean, basically this is a chart that does some good patterns, and so kind of just keep your eye on the pattern. And one of those things that could happen, but just trade the patterns. I mean, while it's still giving good patterns, because if the rumor mill does take over, with regarding, like Coke and all that kind of stuff with a takeover, then it's going to like blow the patterns out of the way, and then we'll go into a patternless. That's hard to say.
Say that 10 times really fast.
Patternless aspect. And no, I don't know anything about the one-serve soda product from GMCR. But all I know is with Green Mountain, I'm kind of ticked off at them because the greedy sons of guns, they basically on their Keurig 2s made it where you can't use your own personal K-cup. It has to be one of those, and it's got a little logo on it that is a little chip that is read by the coffee maker. And if you put in one of the other, one of your own personal, K-cups, it won't brew. It'll just basically stick its tongue out at you and won't let you make a cup of coffee. But I digress.
Can you pull the chip out?
No, you can't. It's a bugger. You have to buy K-cups that are specifically have that little chip in there. So let's take a look. Here's a Baba. Baba is still on my good list. However, it is not ready to be purchased yet from my at this particular point. I think, Harlan, you guys made a good trade bouncing off the 50 here. But
right.
My aspect is I'm looking at this potential trend line. We had our bearish 820 cross here. And so right now it's continuing to set up. We do have this trend line up here. It's basically trading this trend channel, which you can see pretty well. It did. What was really interesting is we drew this fib retracement back when the prices were up here, and we said if this does a normal trend, a Fibonacci type retracement, it will get back into this little box right here, the magic fib box. Look at how close those two lined up. Fib, 50%, the 50-day, and that was the low on Tuesday.
Right. We've been talking about this trade for weeks on our service.
Yeah.
And it's just, again, it's just what David said at the beginning of his little presentation. We sit back and we let stocks come to us and we don't chase them. We've laid out that 50% level. We've laid out that prior breakout level at 100. We've laid out the 50-day moving average. So all three of those things came into alignment. And then when we saw that trap door open on Tuesday, we literally bought the open that day.
Yeah.
Is it going to work for us from here on out? Well, it's eking in our favor here. But, aside from a retest with maybe a little shakeout low just to shake some people out and then reverse it, which is a common thing these days, we're fine with it. If it breaks to the upside of Dennis's little blue line there,
oh, sorry,
we could probably take off and go.
Oh, there we go. Yeah, that's what we're looking at. Because if we take just a real quick look at this, guys, if you apply the rule of the cups, like what is a natural cup, or how far does it typically withdraw, or how far does it typically sink? This has fallen about 50 at the 50-day moving average. It had fallen about 15% from the high. Typically, and a sound cup typically is somewhere between, I think they say 12 to 26%, 25%. And so it's in that range, and it looks like it's trying. And at the same time, we're waiting for the market. I mean, one of the things that I really like is right here on the weekly chart of Baba. And one could, if you're playing this flag here, a break above approximately 108-ish would break this flag to the upside. And look where we're pausing. I mean, we're just pausing right there. It's holding. It's interesting with these fib lines, and I'm sure you guys have noticed this before, is these fib lines oftentimes become their own, and I think it's because so many people watch them, they become their own levels of both support and resistance. And so if this entity is going to actually go down and test the 61, then the 38 will fail, and we'll probably revisit the 50 again, and if that fails, then we'll probably revisit at least 61.8.
Right, but for right now, the 50 is acting as a support because it tagged it, the 50-day and the 50% fib. It tagged it and it was defended.
Yep.
So that's important to see that.
Yep.
Now it just needs to stick. Now the other thing is, not to interrupt you too much, but wouldn't you, this is what we always talk about, and this is what David and Dennis are going to be talking about in Florida, low-risk alternative entry points. And that's kind of where we're right in that zone right now for what could be a low-risk alternative entry point versus what are you going to do? Wait for it to go to 120, put in a handle, and then break out and then buy it? By that time, how much are we going to be up versus those people? So that's what we're talking about, lower risk alternative entries. So that is another entry at 120, but why wait for the stock to go up 15, 16 points before you want to buy it? That's a huge trade in itself.
Yep. And the answer to your question is about 15%. That's how much it would be up if with so cool. Okay, let's see, what time is it? I've got time for one more. One more, and I am going to do. Are you guys doing anything with Celgene?
No.
Yeah, I haven't. I mean, I'm watching it, but it's.
High end of the Bollinger.
Yeah,
Weekly.
yeah, high. Yeah, well, that's the 20. That's the 10%. This one's the 10. This is the Keltner. So it is on a weekly chart, and that is more than that, but this is a percentage above the 20 period. On a weekly chart, yeah, that's looking more like it would be interested, getting a little bit of divergence, like it might be interested in pulling back into a correction or into a pullback rather than pushing higher at this time. It's all going to be driven. It could keep punching up if the indexes try to move up also. So,
Dennis, off the daily.
Yeah.
Where do you like it? If you were to look at buying on a pullback, where do you like it?
Yeah, there's a couple of points that you could probably look at this. One is we do have this level of support here. Then we have a stronger level of support here where it did the breakout there. And it's going to depend on what's happening here. And then I'll be taking a look at what my internal strength is, because right here on the momentum indicator, that's telling me that the internal strength that's actually pushing this stock higher is waning. We also have negative divergence on the TSI. That's telling me that the internal strength on this particular entity is coming out. Doesn't mean it's going to go into a huge correction, but somewhere in those areas, it might become interesting depending on what's going on here. Of course, you could.
That's neat, especially when you show the momentum like that for people.
Yeah.
It kind of shows that it's just tired.
Yeah, it's tired. I mean, we had one heck of a run here. I mean, what's the level of the run?
95 to 120.
Well, I mean, if you take from this bounce down here at 85 over the last few months, that's that's a 38, almost 40% run. So cool, folks. I hope that this is a good dialogue. Harlan, David, and I know, David, you got a bug out right at 11, so the way I look at it, it is right at 11. So I just want to say to everybody, Vio con Dios, and God bless, and you guys have a dry, warm week.